Wole Foods has recorded a 142% growth in its profit after tax to 95.2 billion naira at the end of the first half of this year. Ayodele Abioye, Managing Director at Wole Foods, joins me now to discuss the drivers of the uptick and strategic plans for the food business segment going forward. Thank you so much, Mr. Abioye, for your time. No doubt, very excellent results reported. I'm sure you're delighted. So I guess a good place to start is perhaps help us appreciate the underlying key drivers of this performance, because I think many will find it quite interesting to see this type of performance given the economic challenges we're facing in Nigeria right now.
Yeah, absolutely, Wole. Thank you very much for having us once again on the show. 2023 at the start, we started with a very clear goal to further leverage our unique business model. This is centered around commercializing our expanding capacities and complemented by our market expansion, as it were. There's been no doubt, as you said, the business environment remains quite challenging, characterized by rising input costs, inflations, as it were, and of course, other socio-economical issues. In spite of all of that, we have sustained decent returns, as you did highlighted. This is both in volumes, values, and of course, operating margins. Generally, we see our aggregated volumes grown by 36%, and I think this is a very key driver to this performance. Volume growth at 6% impacted the revenue, also growing at 90%, thereabouts to 320 billion.
If I may jump in for a moment. I'm sorry to jump in, but just quickly to discuss the volume growth, because it's quite incredible to hear those numbers. Would you say this is a clear expansion of your market share in Nigeria right now? And if so, what has underlined that success?
Okay, so for one of our expansion strategies basically centered around increasing our platform across our 5 business divisions. As you know, we have 5 business divisions, which is centered around sugar, flour, pasta, rice, and of course the oil mill. So we have expansion programs running in all of them in different forms. And of course, these expansion initiatives are crystallizing. And as they get crystallized, we commercialize them. And commercializing them basically means we're using them to fulfill demands that continue to exist, because food, of course, as you know, is an essential part of human needs, and of course needs to be fulfilled at all in point. Of course, you then need to balance between the other economics about how you can get consumers to afford your product, and that's of course part of the economics that we play internally. So, pretty right, volume growth aligned with our strategy.
Right.
I must also highlight the fact that our export sales grew 15% on last year, and this is a critical market for us that we continue to look into, and we'll continue to do that, particularly looking at the Africa free trade zone opportunities that are all glaring to us.
Yes, I've read that you've highlighted that your supply chain hedging strategy has been widely responsible for why FX-related losses are not that significant in your numbers. Can you just speak a little more to that?
Okay, so reality is that we are not immune to what other businesses have also experienced, particularly when it comes to the FX issue, as it were. We have a very obvious advantage in terms of our ability to upscale, or rather I would say exploit our full material inventory pipeline, which kind of then assisted us in terms of gaining our shares into the half-year performance in terms of fulfilling demands and all of that. So it's important to highlight the fact that, yes, we were impacted. The significance also was also accommodated in the half-year result. We expect that as the year also continues to roll by, which is looking at the second half year, the impact will also be will be taken care of, will be provided for, as it were. And despite all of the ongoing headwinds, our outlook still remains very positive, assuring that our business resilience will continue to deliver these good results.
Right. Clearly, you're a business that thrives on the strength of consumer demand. And you mentioned headwinds earlier. Obviously, the fuel subsidy removal is one that I imagine is likely to impact many businesses in the second half of the year. And we'll see the impact perhaps a lot more when we see your third quarter numbers. But on top of that, there is also the prospect of a review of electricity tariffs. And putting all this together, I just wanted to hear your thoughts about how positioned BUA is to weather the storm, if you like, that is obviously coming.
Okay, I think for us, energy prices is also part of the rising input costs, as it were. Electricity, grid electricity specifically, if I would call it, it's not something we depend on in manufacturing, and you know why it is so in the manufacturing sector in Nigeria. Yes, we do take a bit of it. Things are getting better and improving. We just hope that in the future we'll be able to scale up utilization on electricity, which is quite excellent. However, gas energy is a major input for us. Again, as you know, this is also FX denominated, and of course, it's also impacting the input costs. What we can say here primarily is as we continue to do our best to edge the disposition, we're also hoping that government will extend some of its palliatives to this section of the input to manufacturing. Some were given recently and announced by the president, as you know. And of course, if that is also extended to gas energy, I think will be a very good subsidy input, which will also help to kind of reduce prices and also impact inflation.
Yeah, it's great to hear how you are managing that in terms of how it impacts your cost. But I was actually focused more on how it impacts the consumer who would be buying your product and how you think potentially you are going to manage the potential impact of that on your sales.
Yeah, so that's exactly what I was saying. If part of the recent palliatives that the government rolled out recently to manufacturing, if we could extend that also into the gas energy space, I think would also help a lot in terms of reducing input costs. This is what I say. We will obviously be able to pass that subsidy also back to consumers in terms of pricing, by again, of course, taking down prices to be able to impact the consumers and also give them that affordability edge to be able to buy more of their favorite products, particularly BUA foods, as it were. So this is one area that I think can be very, very positive and also can help.
Okay. Very quick last question. In terms of major strategic moves going forward, what can you tell the market in terms of either expansion? You mentioned your exports business is growing. I just want to hear the big ticket activities that you're likely to embark in very quickly.
Okay, so for us it's clear. In line with our unique strategies, our product innovations and expansions remains at the core to our business strategy. Expanding product offerings, gravitating also into the downstream market.
Right.
These are all ongoing initiatives that we continue to drive basically to capture more market share. Of course, we're looking at introducing new packs and all of that. But generally, and on the big tickets, and in very specific terms, our super strategic expansion plan centers around the backward integration program in the sugar. The flour platform, we have just completed additional 150% capacity increase. Pasta is also coming on stream. Our rice has just debuted in the first half of the year, and we intend to continue to expand that, also taking advantage of the support the government is giving to the agricultural sector at this point in time. And then finally, also, we'll keep pushing out new innovative products and packaging for our consumers.
Thank you very much for sharing your insights into the numbers. I've been speaking to Ayodele Abioye, Managing Director at BUA Foods. We'll bring you more conversations here on Power Lunch West Africa after the break, so do stay with us.